Eric, good to see you. Thanks so much for joining us. I guess one of the factors why tech stocks have pulled back of late has been rising rates. And I just wondered, big picture, when you decide to buy or sell your investments, what portion of that decision making is where the discount rate is?
Hey, Wilfred, thanks for having me. Absolutely, it weighs on me, and I think all investors, because it's going to affect all stocks, obviously, depending on if inflation keeps up from here. And that's the million-dollar question that no one knows the answer to. But so if we are back into a world of rampaging inflation, I don't think that's likely, but if we are, that's going to be bad for all stocks. That's gravity to all stocks, but especially so for tech stocks. They're going to be the most affected by it. The growth stocks have been, the canary in the coal mine so far this year in terms of being pulled down by the threat of inflation. And so the question here is, are the lows in? Are we going to bounce from here for the remainder of the year? Or are we going to see things start to roll over and start to affect other sectors as the summer plays out?
Let's talk about some of the names, first of all, that you think perhaps still are a bit vulnerable before we get onto your picks and the ones you're positive on. What's your view on Tesla at the moment, and why?
So the growthier parts of the tech sector, and so I'd say Tesla is there. I'd say, several fintech companies are in this category, several SaaS companies. They are, the multiples of these companies, including Tesla, are still very elevated to where they were trading at pre-pandemic. And you compare that to a lot of the FANG names, a lot of the older tech names, a lot of the IBMs and the Dells and those kinds of names. Those companies are trading actually mostly back pre-pandemic levels now. They've been cut back to the pre-pandemic. In some cases, like Salesforce, they're even at a discount to where they were trading at pre-pandemic. So it's not a one-size-fits-all tech market. There are definitely some stocks that look frothy. I would say Tesla, falls in that category. Another one I'm short is Square. Falls into that category. And so I do think you need to be cautious.
You could have said that about Tesla, though, so many times over the last year and last few years. And the valuation never seemed to really matter. Neither did
Right.
the so-called frothy market action. And all the shorts got burned. Why is this time different?
Well, I mean, the bottom could be in, Sarah, no question. I mean, the one thing I guess the bulls can take heart in is for a lot of these names, and Tesla's almost at this level, a lot of names have been cut in half, basically, from their all-time highs. That's really unusual over the last 20 years for tech stocks. It's kind of commonplace, especially for smaller, growthier tech stocks, to see 20, 30% pullbacks. 50% is extreme. Really, the only other times in the last 20 years where it's been more than 50% is the great financial crisis or the dot-com bust. And so, are you willing to bet that we are on the precipice of being the third event like that in the last 2 decades? I'm not sure. I mean, the probabilities say probably the bottom is in, and we are going to see a short-term bounce from here. But it's all what are you comfortable in, and the kinds of stocks that I am owning right now are ones where I still think there's either a fundamental mispricing if it's a growthier name, or it's more of a question of it's a more value-oriented tech name that I don't think people really fully understand yet.
Shepard Smith here. Thanks for watching CNBC on YouTube.